All right, guys, let's talk about now fair value gaps and inverted fair value gaps. This is really important for you guys to understand. Um, you usually use these to understand when there's a strong movement coming to the market and when the market usually is going to start changing direction as well. If we're talking about the inverted fair value gaps. So, overall, learning what the fair value gaps and inverted fair gaps are, we're gonna go through all of that in this small video. Understand how these imbalance reveal where liquidity and orders remain unfilled. Discover how use gaps and anticipates retracement and potential entry zones. We're gonna identify the difference between continuation gaps and reversal signals. Build setups around gaps to fill to improve timing and precision. So this is really good to know because this candle will tell you when exactly you can enter the trade. And I'm gonna show you guys the chart in a second. But let's talk a little bit more into fair value gaps. For the fair value gaps, form when there is a strong price movement that leave imbalanced price between the candles. So example, usually happens when there's three candles. You can see here one, three candles in here. So the candle in the middle usually have a gap. So the candle that follows this one, which is this one here, as you guys can see, it didn't broke down, right? So it created like a little gap here. Same with this candle over here. Let's see this candle close over here, and this candle open, and this candle push really hard. Let's see, like 7 8 points on gold, and the next candle open over here. So this is an imbalance, and it's called an imbalance because the market shoot up and probably left behind a lot of buyers, so this is known as buy side. So as right now the market is probably at on a discount price over here, right? And then we got market pushing to zero point 0.5 Fibonacci, and then this strong candle, which is that in the engulfing candle, brings the market to have a fair value gap over here. And this fair value gap, there's a lot of time the market comes down to test it out. So when you see the market coming in here, testing this level, this is probably our best entry. We enter over here, we put a stop loss down here, and the market come test this fair value gap and keep going up, and that's when we get good entries. So if we let me see what else we got here. Fair value gaps are key areas where price often return to rebalance, like I was saying here. So these create an imbalance. So the price come up over here, and the price want to rebalance the market, so it comes back and toes this level. And I'll go deep into that now on the chart. For inverted fair value gaps, it's kind of the same, but you guys can see that the candle forms and hit fair value gaps. So when we see this candle coming up, the inverted ones, usually is telling you the market is gonna have a retracement and it's gonna change momentum. So let's hop in the chart here. I have marked some fair value gaps and inverted fair value gaps as well for you guys to understand what I meant by this. So you guys can see here, like I was explaining to you guys, this is the three candles. So these create a fair value gaps. So when the market come back here and we grab some liquidity at this level, a lot of people get out of here because we got this fair value gap. The market is gonna come in here and test it. And you guys can come here. You guys can see the market come here and the market stop it. You can see a clear reaction here about almost 20 points. So this is clearly a lot of people trigger and got back in here, and the market shoot back down, creating a small fair value gap here again. So you can see the market get test the fair value gap here. Let's go back to this inverted fair value gap here. You can see the market is getting at the direction. Then we can see this strong embedded fair value gap here. So what the market does is supposed to come all the way up here. The market come down and retest this small inverse fair value gap that we got here. So we also got a fair value gap here. You guys can see here. The market come test it out and shoot back down. Momentum was not down. The market didn't take this lower low here, so then keep going to a momentum over here. So we got another fair value gap here. This is a little more easy to read. You guys can see the engulfing candle that I was talking to you guys here, and you can see the engulfing candle create that fair value gap here. You got one candle, two candles, and three candles, and you can see a big gap between that candle in the middle. So that's the easiest way to find the fair value gaps. So you can see, like I was always saying, if you see the market going down, always expect for the market to come test this fair value gap. So if you see that the market didn't take out this level here, so you might want to hop in a buy here to aim for that fair value gap. Same, if you come here, you see the market start hesitating to keep going on, and start forming like a bearish momentum again. So the market respect the fair value gap, but it's not using the fair value gap to a moment to keep going up. So you might want to hop in sell. In this case, the market did respect the fair value gap by about like almost 40 points, which is no one want to be in those trades, obviously. So this is pretty much, guys, explain to you guys about inverted fair value gaps and fair value gaps, and why it's important for you guys to read them, because you can get in a good trade over here. Place your sell over here, your stop loss right above this fair value gap, because you aiming to not get stop out, and helping the sell. It's a whole 40-50 points in gold. It's a lot of money. you know Same here. You can fair value gap here. Market came down. You can see the market like hesitate over here. So you can place your buy. Get your 20 point, your 10 points over here. There's a lot of fair value gaps here. The market has been a little crazy lately, but this is an overall for fair value gaps for the past couple days in gold. Let's move to the next video, guys.